Welcome, you're watching The Big Question. I'm Tamanna Inamdar. US President Donald Trump's tariffs and subsequent actions by other nations, particularly China, have cast a shadow over global trade and stability. The world is effectively reeling under a trade war as both US and China have turned up the heat. Donald Trump has announced an additional 50% tariff on China less than 48 hours after Beijing announced a tit-for-tat 34% tariff on the United States, which Trump has declared as part of his reciprocal tariff order. This now takes the US tariff on all Chinese goods, possibly, because remember, this is dependent on what negotiations come through by April 9th, possibly to a staggering 84% as the US-China trade war escalates. 24-hour window of opportunity has been given by Trump to Xi Jinping to withdraw the additional tariff he has imposed against the US, failing which Chinese goods could face these tough tariffs. Meanwhile, China has said that the US threat to escalate tariffs on China is a mistake on top of a mistake, and that China will fight it till the end against what they call the USA's blackmailing nature. Amidst all of this, global markets, economies, every nation is wondering what is going on. For India, of course, we are relatively better positioned. With a more competitive tariff against China and other Asian peers, India hopes to bank on replacing manufacturing away from some of these countries. There are already some reports that Apple plans to send more iPhones to the US from India versus China because of the differential in tariff costs. Moreover, negotiations with the US for bilateral trade agreement continue. External Affairs Minister S. Jaishankar spoke to the US Secretary of State Marco Rubio. The two sides have agreed on the importance of the early conclusion of the BTA, or the bilateral trade agreement. On top of that, there has been no change yet to India's GDP outlook. When it comes to stock markets, strong domestic support amidst persistent foreign outflows has helped us shore up. But the question we're asking today is, are we heading to a nuclear economic winter, as some have dubbed it? Or is this a negotiation tactic which could change in the next couple of days? Will better sense prevail? To speak more on this, I'm joined by D. Subbarao, former RBI Governor, Manish Dangi, CEO and founder, Mosaic Asset Management, and Prabhu Dayal, former ambassador and author. Welcome to all of you, and thank you so much for speaking with us. Mr. Subbarao, I'm going to start with your views and take on this. How confident should we feel about the Indian economy right now?
Trump's tariffs have been all over the place, including on India. We thought we'd get away lightly, but he's imposed reciprocal tariffs even on friends like India. There is a view that India is relatively insulated because our exports are relatively small. The export sector as a proportion of GDP is relatively small. But the important point is that exports are important for our growth and for our welfare, because if you look at our economic history, growth history, India growth story has always been linked with export performance. There's been a strong correlation between export performance and India growth. So we should be worried about this. We should be worried not only because of the tariffs, but because of an impending recession. The probability of a recession has been hiked up to about 60%. So India should be concerned about it. But as you said, there is also an opportunity for India, unlike many other countries, because there is, number one, there is the possibility of trade diversion. Trade that China and East Asia have been backing upon. If there is tariffs on them, that trade might be diverted to India, as indeed happened during Trump 1.0. The second thing, a much bigger advantage, but much longer lasting advantage, is the China plus alternative that you also talked about, which is that if investors are trying to look for an alternative to China, or in fact a replacement for China, India would be well positioned because we can offer something that most other competitors for the plus one cannot offer. Take Vietnam, Thailand, Malaysia, the Philippines. We can offer a large domestic market. So we have an advantage there. So I believe that on balance, we are less affected than most countries, but any complacency that we're not affected at all will be misplaced.
Yeah, no, completely. And even the less affected, how less affected is something that we have to see. Even with lower tariffs, can India compete with what China is doing in terms of pricing and supply chain? Is a questions yet to be explored. But let me come to the crux of what we're talking about, and I'm coming to Manish Dangi with this point. It's a timeline of, say, maybe the next 24 to 48 hours, Manish. Is there a view that better sense will prevail, or are we at this point clutching at straws that Donald Trump is not messing about this? I mean, videos today have surfaced from him in the 80s talking about how he's so bothered with tariffs. So I'm wondering whether we're being optimistic, thinking this is just a negotiation tactic.
I think I sort of think, Tamanna, that there is a decent playbook here, and it is going to take a lot longer than what markets are prepared for, and it essentially entails depreciating dollar, of course, imposing a lot of tariffs to disincentivize importing in US, and of course force Fed to cut rates sharply, again to facilitate weaker dollar. All of this will take time, and I think Trump, one could argue, could have his whims and fancy, but he is being supported by ideologues now, and there is a decent playbook here, as I said, and all of this will last. So this whole thesis that in 24, 48 hours something would unwind, very, very difficult. If the counterpart for US were Taiwan's and the Vietnams of the world, they would have folded. But today, China is the counterpart, and if you see important things, what's happening in China, they're simply not folding their cards. They actually, just contrary to what US wants, you've seen CNY actually devalue, and which basically means that China is saying we don't care. So to some extent, we are in this regime. It's a bad equilibrium. We don't even have an equilibrium, but it's anything which we will all get to a equilibrium is at least 3-6 months out. We will have small negotiations with small countries. Likely that India would also sort of come to the terms of this new reality. But the big thesis is whether US, Europe, and China would sort of come together on anything which they all agree. I think it's sort of many months out. So this lot of uncertainty in financial market, and the turmoil most probably would sustain, Tamanna, for much longer than we all are prepared for.
That's so all of the optimism to some extent that we're seeing today, for example, Manish, and look at what the messaging is coming out from the government end, that our bilateral agreement talk is on, our own negotiations are on, our domestic economy is robust, they've not reduced the GDP outlook. What does that count for?
No, listen, okay, I understand, every country has to sort of fend for itself right now. And, policymakers really can't tell you that it's pessimistic out there. But think of two things. One is that we are much more intertwined with the US today than ever, largely because of our service exports, not the merchandise exports. So a slowdown in US, which, Mr. Subbarao said, 60-70% chance of recession, I kind of assign, sort of even higher, would essentially entail that India takes a little bit of a pain because of US slowdown. So as I said, our business cycles are a lot more intertwined with the US. Second thing is it's an inverse of COVID shock. What we are seeing is at least from an Indian standpoint, a supply shock of a kind, which is inverse of COVID, because if let's say Chinese were not to sort of export to US or many other countries, which because of high import tariffs were to not export to US, then where would those goods go? Because goods supply is in place, unlike COVID. And so in some sense, what I fear the most for our markets and corporations is that, there could be a lot more dumping and sort of a deflationary force, so to say. So you have an inverse of COVID from the point of view of supply, and you have an inverse of COVID from the point of view of demand also, that there is clearly a demand destruction going on. This is what crude is telling you right now. Yeah. So in a sense, the macro setup, until about a few months ago, that we all argued many times that India is in a decent place, nothing to do with us, but, everything seems to have changed outside. The air is bad and polluted outside, so, you ought to be feeling bad about it.
Yeah. So how do you protect yourself then is the question. Prabhu Dayal, let me come to you, because this entire situation is going to play out on many fronts. So while economists and market participants and policymakers are trying to figure it out, this also comes down at the end of the day to a diplomatic conversation. How difficult is it right now to negotiate with Trump's White House? I mean, I saw a piece a few hours ago saying Elon Musk is trying to persuade Trump to roll back on tariffs, and we're literally at a time when the White House and its participants are speaking directly to people, unvarnished. How do you, as a diplomat, manage something like this right now? Put yourself in your peers' shoes right now.
Well, first of all, thanks for having me on your show. You know, negotiations with the Trump administration are not going to be easy at all. On the one hand, President Trump called Prime Minister Narendra Modi a great friend, while on the other hand, he announced 26% reciprocal tariffs on India. However, you know, diplomacy is the art of the possible. Now, two things need to be specially noted. Firstly, there is a clause in the executive order signed by President Trump last week that offers some respite to nations who take what he calls significant steps to remedy non-reciprocal trade agreements. Now, India was one of the first nations to have started talks on a trade deal with the US. Secondly, unlike many other countries, India is not imposing any sort of counter tariffs on the US and will focus, as you put it, on finalizing the bilateral trade agreement as quickly as possible. India has already tried to win over Trump by slashing import duties on Harley-Davidson bikes from 50% to 40%, and also on bourbon whiskey. India has also dropped a tax on digital services, known colloquially as the Google tax, that affected US tech giants. However, as I said earlier, it's not going to be easy to negotiate with the Trump administration. Nonetheless, the focus of the government of India is to avoid an escalation of this tariff war. India's objective has been to achieve a trade agreement.
May I ask you, Ambassador Dayal, to what extent and at what point will we have to also slap retaliatory tariffs? Because we've done it in Trump 1.0. And so far we're saying we're sitting it out, we're not clubbing up with any country, let the dust settle. But at what point will India also have to come in with retaliatory tariffs?
Well, the signals which are coming out from the Indian government clearly indicate that India does not want the tariff-related tensions to escalate. And that is why, in fact, India has been unilaterally lowering the tariffs instead of raising them on any product. And significantly, as I pointed out, India has started negotiations to build a framework for a trade pact. So instead of engaging in a harmful tariff war, India's objective has been to focus on the trade agreement, which will benefit both sides and help to promote bilateral trade. Now, let me mention that many things work to the advantage of the United States also. For instance, generic medicines. You know, generic medicines manufactured in India are considerably cheaper than the medicines which are made in the United States. And Indian generic medicines have helped to make US healthcare more affordable. So de-escalating this sort of tariff-related situation is also in the interest of the United States. And I think that the focus at the moment is to work towards the trade deal rather than escalate tensions.
But can there be a trade deal, and how can we be resilient? You know, domestically, Mr. Subbarao, what can we expect to happen? We will hear from the RBI governor tomorrow. There are some expectations being baked in that maybe this time warrants more than a 25 basis point cut. I'm not sure what your view is on this. How can we shore ourselves up? It's, you know, we keep comparing this to COVID. When it's bad out there, you have to build your own immunity. What is the economic immunity India can build?
Well, first of all, about how the central bank can react. That's the most important question. I'm a bit wary about commenting on the RBI policy, but generally about RBI and central banks. The objectives are price stability, which is low and steady inflation, growth and jobs, and financial stability. Even at the best of times, it is difficult to manage the challenge between these two objectives. So at a time like this, when lots of things are outside their control, with a lot of uncertainty, it's difficult for central banks to decide what to do. So as far as RBI's policy stance is concerned, last time around in the February policy review, they cut the repo rate by 25 basis points. It was a straightforward decision because the inflation outlook was benign. The rupee had adjusted, and there was concern about growth slowdown. So 25 basis points at that time was a straightforward decision. But today it is very uncertain because there is inflation. So far is benign, but we can never take inflation in India for granted. Growth will be affected because of tariffs. As I said earlier, exports, even though they're a small percentage of our GDP, they are an important segment of our growth story. So India cannot grow unless there are exports. And on top of that, if there is a recession in the US and around the world, export demand will be further hit. So growth is a problem. And even financial stability, we can't take it for granted because, there is, for emerging markets especially, capital flows and exchange rate stability are part of the monetary policy equation. So unlike advanced economies, which struggle only with growth and inflation, we will struggle at the same time with growth, inflation, and financial stability. In other words, managing this impossible trinity. So I think for the Reserve Bank of India, at the moment, look at inflation and act on that because the playbook for central banks remains the same. If there is inflation signals, is it temporary? Will it go away on its own? Or will it just play out? Will the central bank have to react? So that's an important thing for the central bank to do. And more important than that, I can say from my own experience, for central banks generally, and for the Reserve Bank of India in particular, at a time like this, apart from what they do in terms of policy action, it's also very important for the central bank to communicate clearly how they see the situation and how they're going to react to it. Because giving guidance to the markets and to the larger public and imposing confidence at a time like this is very important. I'm sure that the Reserve Bank and the governor are sensitive to this challenge and this requirement. I'm sure they will respond, but I just thought I'd point out because people think only in terms of the policy metrics, but communication is also very important.
No, I agree completely, Dr. Subba Rao. Communication, body language, the confidence, the street wants to hear from policymakers right now that there is a plan. In terms of equity markets and the kind of carnage and volatility we're seeing, any thoughts there, Mr. Subba Rao, on what we need to hear from policymakers right now?
Yeah, I'm going to get unpopular by saying this, but last night on TV I saw some reports that there is a lot of pressure on the government to come to the support of people who lost money in the bloodbath in the stock market. Now, I don't believe that the government has anything to do with this because volatility is an integral part of the stock market. Extreme volatility is also an integral part of the stock market. Investors, big or small, when they go into the stock market, they're going for the rewards, they're willing to take the risk. So if there's an upside, they're taking the upside. They're never saying that we're going to give away part of this to the government. So when there's a downside, they've got to take that. And more importantly than that, for the government to come to the rescue of stockholders, people who lost money, is going to be a big, big moral hazard. Because the implicit assumption behind this is that the government is sitting on an infinite amount of money and there is no cost to it. Of course, there's a cost to the government coming to the rescue of people who lost money. For example, the government tells the public sector enterprises to go into the stock market and buoy it up. There is a cost to doing that. And that cost is being paid by the entire economy. For example, if I'm not investing in the stock market, I'm being very conservative, but I'm a taxpayer. If on the other hand, the government is doing something to support a section of the population who've lost money in the bloodbath in the stock market, why should the rest of the economy pay for it? And there's a cost to it, and that's unfair. So I don't believe that there is any responsibility on the government to support people who've lost money in the stock market, except to ensure that the markets function properly and regulators are doing their job.
No, interesting point. I mean, apart from these reports, nothing cogent which has come out on it, and domestic investors themselves seem to have this kind of resilience. In fact, Manish, I want you to come in on this point. One aspect of it is what Dr. Subbarao spoke about. Should government intervene at all? Most would argue no, and why? Maybe the signals coming from the government become more important from the equity point of view, that yes, India has a plan, yes, India is resilient. In our case, your budget announcements on tax cuts are going to kick in from this quarter. But I want your view on the kind of faith that Indian investors have shown. Is it now turning into blind faith? Is that faith warranted for people who are watching this, who have investments, looking at their portfolio, thinking what to do their SIPs? What should they be doing?
So on the government support, my master's voice is spoken, so I won't say much. And frankly, if you look at the charts, it looks like a wrinkle, Tamanna. We've had very little drawdown year on year, sort of pretty much flat, both here as well as in US. I don't think, and this question of yours, should government support, you should reserve it for a few months out, I would say. This is all I would say about, how markets would be. But domestic investors have been pretty resilient. See, India is sort of one of those very, very few countries, Tamanna, where the new investors and really newly minted investors have actually entered in markets over the last 5-7 years. Now we'll see, as to how they behave when these macro shocks and the panics sort of play out. Do they freak out, or they sort of stay disciplined and actually believe in this idea that the equity is for long term, and this essentially means at times you have 20, 30, sometimes 50% drawdowns, because that's routine as far as the equity markets are concerned. Now it sort of speaks very nice, when we speak on TV show that 50% drawdown once in a decade will happen. But when people experience it, we know as a matter of fact that they freak out.
Yeah.
And there are sort of lots of studies about, what kind of people, and the English-speaking ones, well-versed, literate, they freak out. And so who knows, how Indian investors will act, because a large majority of as I said, are the newbies, and we haven't seen their behavior. But if the past were to be guide, Tamanna, or the global investor histories were to be guide, invariably in such macro shocks, people do freak out, and they are the ones who actually create panic selling and bottoms in the market.
Is this an opportunity to buy, Manish?
No, come on. See, there is so much uncertainty, Tamanna, right now. A lot of stuff which is happening right now, sort of now I'm speaking beyond my pay grade, but I think the whole neoliberal setup that Nixon and Thatcher had put up back in 80s is being upended. Trump, I think, wants to be known historically as a guy who actually produced another Nixon shock. He wants to complete this Mar-a-Lago Accord, where he wants to force countries to depreciate their currencies and likely peg them to dollar. All of these sort of are very complex matters, and US is no more a hegemon as it used to be when it forced Japan to appreciate the currency significantly in 80s. So my sense is that, this playbook of US, there is some coherence and cogency in it. It's just that it is going to take a lot longer than, what markets are prepared for. And markets essentially are great leverage on economy. If economy were to slow down, and now given, as I said, it's an inverse of COVID shock, and that essentially means lower margins, I think, corporate margins can struggle quite a bit, not just in US, but also in India. So I think, in so much uncertainty, sort of wait out. If you were to be a one-time big investor or a cyclical investor, if you're doing an SIP, this is precisely why you did SIP at 26,000 in Nifty, so that you can buy at 22,000 also. So you must continue. That discipline is what markets are testing you for today.
So this is where, and in the long term, the SIP guys are the ones who are always feeling steady at the end of it. No, government should not intervene for stock markets, but the right messaging is important. What the RBI governor says also becomes very, very crucial. But the consensus on this panel seems to be that India is relatively better placed to weather the storm. Having said that, the uncertainty of this time is something that no one can be entirely prepared for. With that, I want to thank all of you for joining us on this episode of The Big Question as well. To our viewers as well, thank you so much for seeing this show.